Beautiful people from YouTube. I am live with Monty Greenspan, and he's actually just sending out a tweet over here letting people know to join the stream because we're talking about some stuff that's actually going to impact all of us. And Monty, appreciate you hopping on, hanging out, having a conversation, and sharing all the insights that you usually charge for.
I charge. It's funny. Okay, cool. We should definitely do that. Yes, thank you. Thanks for having me, Action, and thanks for joining me today on this very momentous occasion and very interesting markets lately.
Yeah, when you say interesting markets, you're not kidding because things were looking really good and they weren't looking so hot. Like it's been a roller coaster for a lot of people, but there are indicators out there that say that things are not looking as good as they were before, right?
Yeah, so about probably like a few months ago, I don't remember exact timeline. I wrote an email that says, we're all going to get rich again. And then that was at the beginning of the year, the economy was looking great, and there was expectations that ahead of the election the Fed was going to want to get loosey goosey with the money again and try to get Biden reelected, because nobody can reelect a president who's presiding over a failing economy. And generally speaking, the Federal Reserve reports to the president. The president is the one who appoints the chairman of the Federal Reserve. So it's literally, you know, uh, Biden is literally Jape House boss. And I guess that, slippery-minded Biden just forgot to tell Jape House to turn the money printer on, ahead of the election. And Jape House is sitting there right now. So the January we were thinking like 3 or 4 rate cuts for this year, but it's May, and there haven't been any, and there isn't any on the horizon. And now analysts are thinking, okay, maybe one rate cut this year, maybe none. And some analysts are thinking about like rate increases before they decrease. So that's not very good. There's a lot of reasons for that, but I just wanted to start with that before we dive into some of the metrics.
Okay, so hang on a second. Not only are they not making the machines go burr and giving all that liquidity that essentially, drove the last bull market, they're looking to possibly increase the rates for some ungodly reason.
Yeah, no, the Fed is not saying that they're going to increase rates. That would really look stupid because they've been projecting 3, 4 rate cuts this year. Now they're not projecting 3, 4 this year anymore. Now they're projecting like one or maybe none. But there are analysts out there who are saying, yeah, we need to increase rates in order to stifle inflation, because the inflation's not going away. They went overboard in 2020, 2021 with the money printing. They went like way farther than anybody should ever go. Completely irresponsible. They printed. I don't remember the stats offhand, but like some very shocking amounts. And I think like something along the lines of a significant percentage of all money that was ever printed in the United States was printed in the last 5 years.
Yeah.
So with that, and I mean, we can kind of take a look at the Fed's balance sheet here. It is public information. I'd be glad to share my screen with you here.
Go for it, please.
Yeah. So this is the Fed's balance sheet, right? It was a steady, under a trillion for quite a while. And then boom, 2008 happened and they increased their balance sheet. When the Fed increases their balance sheet, what that means is that they create money from thin air and use that money to buy government bonds. So they're basically lending money to the government. What money they're lending? They're lending money that just doesn't exist to begin with. They're just inflating their own balance sheet. Alan Greenspan said it best. The U.S. government could never default because they can always print more money to pay their own debts. Hold on just a second.
You're good. And that's his cousin, by the way, another Greenspan over there. I'm kidding. I'm totally kidding. No, but that
Okay.
is absolutely right.
Yeah, my wife is just walking in the background, so I'm going to turn my camera off, but you still have
You're
my screen
good.
and my voice.
Hi, wife.
Um, she can't hear you. You're on my headphones, dummy. Anywho, So basically, they in 2008, this is quantitative easing. That's when the term quantitative easing was really coined. Are you done? Okay. Let me know when you're going back. I'm done. I'm done. Okay. And at the time, people started buying gold, and countries started buying gold because they thought, like, well, hey, money is being printed like it's going out of style, and there's going to be all this inflation, but the inflation never really came. And throughout the next few years, I mean, they've been various periods of experimenting with this quantitative easing, right? Quantitative easing 2, quantitative easing 3, and then this is really like, you can think about this like a heroin junkie, right? It's like every time they're on the wagon, right, and they're like pulling back, pulling back, pulling back. This is actually pulling back stimulus. This is supposed to be supposedly good for the economy. It's very difficult for the economy because it means that things are constricted. There isn't as much money in the system. They're taking money away from the system, taking money away from businesses and from people, and basically reducing some of that money that's being printed. But that's also should help stifle inflation, which is the bad guy. And then obviously you can see 2020. they put 2008 to shame. It was like they just went losing them on that, and then
Yeah, I mean that is a pretty steep curve right there.
yeah, and then they didn't stop with that initial spike either. They kept going, right, all throughout 2021. There was no reason for that. The markets were just like partying like there's no tomorrow. Like by the time COVID was like people were like, "What's COVID?" Like, like nobody cared anymore. But they were still printing money until inflation started, right, and until that really things really got out of hand over there. And I think we can probably see like something like
I love how you're looking around. It just tells me that you probably have like 17 screens in front of you right now.
I have 4. 1, 2, 3, 4. Um, yeah. But basically, they just eroded the ability of the dollar to hold its own value. And so here we can see basically like that, since mid 2022, we all remember 2022 as the infamous bear market that we all survived, and got the T-shirt and had to scrounge and scrimp and save, and our bitcoins weren't worth as much anymore, and uh, you know they started like getting rid of that, right? And then they did a little bit of a taste there, but no, they just continue to go down. And so no more money printing. And that's the history of the Fed's balance sheet.
All right, so quick explanation. At that peak of 2022, right there, things started coming down. Isn't that a good sign?
Yeah, so it should be, except that when the Fed printed all that money, right, and now they're taking it back, is basically like sucking all the oxygen out of the market and out of an economy, right? And the expectation, I mean, people were, the stocks were going up and Bitcoin was going up throughout the course of this year because of largely, I believe, due to the expectation that the Fed's going to start printing again, that they're going to get back into this, they're going to start cutting rates again. We can look at the interest rates. It goes hand in hand.
I mean, I do remember everyone carefully watching those interest rates. Like people that had no idea what it meant were all watching to see, okay, where are we going next? Where are we going next? And it seems like that narrative has kind of fizzled out a little bit, and people aren't paying as much attention to it as they used to.
Yeah, so that's what happens. It's exactly what happened. People kind of fell asleep at the switch over here. So here's the interest rate graph. Like people got so excited about the runes and the ordinals, they just forgot that there's a driver behind all of this. The number one money manipulator in the world, the biggest financial institution in the world, the U.S. Federal Reserve. So yeah, interest rates were on the floor. Since 2000, through basically since 2008, they put the interest rates on the floor in order to try and help the economy. They went up till 2019, 2020. And because of COVID, they dropped them onto the floor again. And what you really want with interest rates and what's really supportive of the economy is that they're going down. Not that they are low, but actually, what's the most supportive of interest rates is if they're moving downward over time, right? So in this case, we can see that they actually went up by one of the fastest paces on record. And indeed, like it was very painful for the economy to watch. That was the 2022. And the hope was that they'd be able to start reducing interest rates gradually and kind of support the economy and support all those people who have home loans now have to pay a bit less every month instead of a bit more. All of the businesses and everything like that. That would be very good. But the problem is that when you have interest rates in the sky, it becomes very difficult to operate. But yeah, that's where we are right now.
All right, so but you can't bring rates down. I mean, I get that the curve coming down is what everybody, gets excited over. Like, yeah, this is going great. We're excited that rates are coming down, but you can't bring rates down unless they are up, right? Like you can't go below I mean, you could go below 0, but that would be just a little bit wild. Um, but right,
You
you
don't want
know
to
what
go
I'm saying,
below
right?
zero.
Oh, absolutely. It's like when
Going
oil was
below
trading,
zero means
negative.
that you yeah, no. Going below zero, and it has happened in Europe. Not
Yeah.
by very much though. Going below zero basically means that you're paying money to hold your money in a bank. And what happens then is that people start pulling their money out of the bank.
Yeah. No,
In
absolutely.
Switzerland, they can get away with it because, like, okay, you're paying for the security of holding your money in Swiss francs. So, like, they feel justified in that. But in most places, in the United States, like, how fast? Like, if your bank would tell you, hey, by the way, you need to pay us, 2% in order to hold your money in the bank. How fast would you go and just pull all your money out?
Oh yeah, no, absolutely. There's no question about that. But we need the rates to not be at 0 for us to be able to bring them down. So couldn't you say that having them at around at 5.33 right now, isn't that healthy if we bring them down?
Right. So the problem is inflation, right? And this is what the Fed is trying to fight, right? This is the monster that the Fed created with all the money printing,
Yeah,
and now they're coming in to be the hero by fighting this inflation monster. So here's the U.S. inflation rate over the last 10 years. Um, you know, I mean, having a little bit of inflation, I mean, supposedly is good for the economy because well, for a number of reasons. So, number one, for example, let's say a company, wants to is expanding, and you've got an employee who who hasn't really done much over the last year. He's kind of has a steady rate of production. Let's say he's not increased his value to the company, not decreased it. The employee feels like he needs to get a raise, right?
sure.
But the company can't actually decrease his wages, right? So if there's a rate of inflation, right, the company effectively is able to save money on the employee without telling him, hey, you're getting a pay cut, right? If
Right.
the employee does perform very well, right, and he increases his value, they can give him a raise in order to incentivize him to stay with the company for longer. But if he hasn't, and they want to actually like cut his wages, they can't really do that without him getting very upset and feeling dejected and causing damage to the company. So that's one example of why inflation might be good. I don't believe that it's great. I believe that the power of people's money and saving money should be rewarded. But with inflation, saving money is disincentivized. So here we can see 2021, basically inflation starting to creep up. And the beautiful thing about this, or the funny thing, right, is when we compare these two graphs, right? Let me say, okay, 2008, like what happened? They started printing all this money. So did it start? I don't know if we can go back that far. Yeah, we can. Sure we can. 2008, around here, right? 2009, there was actually negative inflation, so deflation, right? And I remember points in 2015, right over here, when the entire world was like, what the flip is going on, right? We're printing all this money, right? We've just printed all this money, and why is there no inflation? And people were like, economists were literally scratching their heads. I wrote articles about it back then, with eToro, and like, it didn't make much sense. So they, the only logical conclusion and the logical next step is to print more money, right? Because if you're printing money and there's no inflation, why the heck would you print more money? Because like there's no downside to that. Like,
Yeah,
it's
there's
just
no
free
negative
money.
effect, right?
Exactly. You're just getting free money. You're able to put it into government programs, line the politicians' prop pockets, and some of that does trickle down into the economy and help people. But then, obviously, when we get to 2020, they they took too much, man. They just took too much. Okay, and like instead of a gradual increase in the money printing, they just completely overboard and then continue to push. So they basically overdosed on free money, and the result is really clear on this graph. You can see it from 2021, until it peaked in 2022, June 2022, which is exactly when, they started increasing the interest rates, right? May 2022, June, July, and that's when they really started having an effect. See, these rate increases, what they're effectively doing is they're stopping that inflation, right? They're fighting the inflation monster with those rate increases. And this trajectory looked really good going into 2024. He said, okay, we can do this, right? And here we get to 2024. It's okay, it's going down. It looks like it's trending downward now. We can stop with the rate increases, and maybe talk about rate decreases, and especially with the election coming up, that's what you'd want to do in order to support the economy. But instead of actually continuing downward, it just kind of stayed. Apologies for the background noises. My wife and daughter are going to a lot tomorrow to a dance competition.
Oh, fun. No,
Indeed.
but I'm just getting text messages from my family with the kids' pictures randomly here. So yeah, I'm secluded in the little
Feel free
box
to
away from
share,
everything
man.
else.
Your wife's like, yeah, this is what you're missing out. Is that what's going on here?
Yeah, it is actually. It happens quite often. She's working from home today, so she's in the house.
Clever. Your wife is clever. My wife just yells at me.
There
Here
it
you hear it.
is.
You have it.
I love it. All
Anyways,
right,
the
but it
which brings
stabilized,
me
right?
to
They stabilized the rate. They stabilized the rate. We're steady right now. They're not moving it
yeah,
up. They're not bringing it down. So it's not
yeah,
bad that
but
they're bringing it
inflation's
up.
at 3.5. No, but inflation's at 3.5%, right?
And that's continuous.
It,
It's not like it's at 3.5 and then it's nothing. It's just 3.5, 3.5, 3.5.
3.2, 3.1, 3.4. It's 3 to 3.5. They don't want it above 2. So that we got about 10 minutes before I got to wrap this up.
You're good.
Anyways, so yeah, it's 3 to 3.5, which brings me to the yield curve. We'll get to the yield curve in just a minute, which is where Matt Case comes in and his brilliant tweet, which was copy pasted and plagiarized by the Cardone family. In any case,
I'll talk
yeah,
to Gary.
you can tell him, hey, wait a second, dude, like at least give some credit. So we get to 3.5%. They can't start cutting rates, because as soon as they start cutting rates, right, and God forbid, increasing the balance sheet over here,
Again,
Inflation's not, it's in a very vulnerable state right now. And they definitely don't want it to go up to 4, because then people will be like literally underwater, and the economy's not doing, it's clearly just not doing great.
yeah.
So yield curves. Let's talk about yield curves, because that's where Matt Case's brilliant tweet. I don't know if you have a copy of that. I'm gonna try and find it here. Because he asked me on the Ask the Advisor. We have the Ask the Advisor show every week, and he asked me about this yield curve, and we did discuss it a little bit there. We'll go back a little bit to go and dig into the entire. See if I can find it. Apologies here. Yeah, there we go.
Yeah, and just to put into perspective, I think a lot of times people don't realize um, what that inflation over time actually looks like. Go ahead, go over this one, then I'll show you a fun little graph here as well.
Okay, so April 21st, Matt Case talks about the yield curve. He says, "Hey, wait a second, we're in deep negative territory over here," and then talks about what that means, and then we did a segment on it from Ask the Advisor, and then this tweet comes out with the exact same graph, like you can exactly the same, and pretty much the same conclusion, which is it's not good for the U.S. economy. And then I mean, I'm happy to show the yield curve. I don't think we have quite enough time to go into like all of the what does this mean. We did definitely do that on the Ask the Advisor segment. So what is it's yield, the Guru Focus. That's right, Guru Focus.
And just so you guys understand, this is what like an aggregated inflation rate looks like since 2020. If you really add everything up, it looks real bad, like real bad.
Yeah. So healthy yield curve does something like a rainbow, like goes up and to the right. This is going down and to the right. It's not a good one. It's not great. And I mean, we're supposed to be staying above this line. Every time that the yield curve goes below this line, there's a recession, and it is the one technical indicator that has a 100% success rate at forecasting economic doom and gloom. The only one. There is no others that can actually say, okay, this was forecasted. And here it is. We've been deep in this negative territory since mid 2022. And it's not getting better. It's just not. So I don't know why Matt decided to pick up on it, and then the Cardone decided to pick up on it. But it for anybody who's actually been paying attention, it's just been this fucked up for a while. So yeah, and then
Those
the
names
last
don't have
kicker
to
in
stream though. Apparently, if you say crypto banter like multiple times, AI bots show up. So if you want to get people on the stream, just say crypto banter. That's
crypto banter, Beetlejuice. So the last kicker here is Warren Buffett, and as much as he can be used as an indicator, I think there was a graph. I don't have it in front of me at the moment, but it's out there online. There have been several stories written about it. Yeah, Berkshire Hathaway is sitting on almost $190 billion in cash. This is also, I mean, this is not a technical indicator or an economic indicator that I would say, but every time Buffett increases cash position, the economy tanked. So clearly, the Oracle of Omaha is also expecting economic turmoil on the horizon. And so you might say, okay, yeah, but Bitcoin is like impervious to that. But I don't really buy that. Even though the correlation, the day-to-day correlation between Bitcoin and the stock market has somewhat dissipated since the COVID crash of early 2020, when everything when everything fell together and then rose together, there was since then and until about 6 months ago, there was a very tight correlation on a day-to-day basis between the S&P 500 and Bitcoin, and that correlation has corrected itself. However, massive macroeconomic forces have always driven the price of Bitcoin, and they always will. So even though the day-to-day correlation has somewhat disappeared, I don't believe that, like, even for a second. You found it. There you go. This doesn't include this year though.
It doesn't. No, yeah, the last one is that little thin line in there on the very last end there, which is the 189 billion that they're just sitting around. So ultimately, what they're doing, they're waiting for things to just drop, you know, drop or whatever, like whatever investments that they're looking at investing in, they're looking for those to dump so that they can buy in at a better rate eventually. Is that what that means ultimately?
Basically, yeah, they're sitting on cash. They're basically winding down some of their stock positions to sit on cash so that when the market tanks, they're going to come buy in again. It's not it's not 100% foolproof, but again, just like the yield curve, it has not been wrong before. So I mean, but Warren Buffett's cash position is a bit less of a strong indicator, I would say, because when you just look at how much cash he has, it's always going up, right? It's just he makes a lot of money, so the cash always goes up in relation to his overall portfolio holdings. But in this case, it has gone up a very significant spike in a short period of time, which would probably indicate that he's sitting on cash at the moment in relation to the rest of his portfolio in order to buy up
Yeah, it's almost
if
like
and
a
when the
third
market does
more
tank.
than 2022, which is a huge, huge increase.
Yeah, absolutely.
All right,
So
Monty, I know you got a deadline here. Here's what I really, really want to hear from you, and I don't want to miss the opportunity. Talk to me about some of the way that you're hedging against this stuff and getting, making sure that you're diversifying enough to, stay ahead of the curve and stay above water, really.
yeah, I don't really do that very much. I mean, I just I roll with the punches. I'm a long-term investor. So like I'm not gonna go, okay, well, market's gonna crash, whatever. I make my decisions when I enter positions, right? And that has served me well in the past. And I think that I'm not gonna go, okay, well, let me just go ahead and sell everything that I if I'm holding it, it means that I truly believe in it, and I truly believe that it will grow within the next 5-10 years. Not hurting for cash at the moment. So I'll keep those positions. Maybe trim where I feel that there's a bit of excessive fat. I didn't go too heavy on the meme coins. I could tell you that I took part in the meme phenomenon for the culture. Um, my ordinal portfolio is it's been decimated. Let's just say the ordinals that were once trading, at $10,000 and $20,000 are not anymore. But I never bought them for the money anyway, so I can just honestly say that I wanted them to have them, and therefore I didn't actually sell any of them, and I'm not planning on it. Dog with hat. I mean, come on, like I bought it in at a $3 billion market cap. So like, how much farther can it go from there? Like I understood this while I was like, it's for the culture, and I don't mind. I'm doing it on money that I can afford to lose anyway, so it's okay for me. But the major holdings, like Bitcoin, I'm not going to sell Bitcoin $4 because I'm expecting a 10 or 20% correction. It just doesn't make any sense for me. Um, am I buying it at this point, or if somebody comes to me and says, "Hey, do you think that I should buy a bunch of Bitcoin?" Somebody did ask the advisor, "Should I take out a loan to buy Bitcoin now?" That was a month and a half ago. If you remember, I told him it's not the right time, dude. It's not the right time right now. But obviously, again, like past performance doesn't indicate future results. I think that a move for Bitcoin towards the 50K level would not be in any way surprising or concerning. Which is exactly where, like right now, the 200-day moving average is sitting. I think it's quite a reasonable place for it to be right now.
Yeah, I see Dabatola in the chat. Like, I think he probably wants you to talk, to invest in things like Chuck. That it's there's always a new meme coin. Monty. Like that's the narrative nowadays, and it's just a matter of getting in and getting out. Because yeah, like you're saying, that diversification through memes just doesn't work long term. Those are short term plays. It's something you get in and get out of. But yeah, Bitcoin. Like I any Bitcoin I buy, any Bitcoin I transact with just sits. I don't do anything with
Yeah,
it. It just sits there, and I don't want to have it go anywhere else. Like it needs to be in my back pocket, and it'll be there when my kids are old. Like why in the world would I ever sell it?
I have 4 kids, dude. I don't pull out.
Wait. All right, there it is.
Okay. Have a good night, man.
Thanks, brother. I really appreciate you hopping on.
All the best. Anytime.
Now, I know Mati didn't go over some of the more interesting things that we're actually working on together, and I want to make sure I actually share it because it's pretty darn awesome. The reason why we're bullish on Bitcoin is because we have that conviction, that long-term conviction, of what we're doing here and what we want to do long term, right? And that's why I work with Mati on other projects, and Quantum Expeditions is actually that project for us. And man, mining Bitcoin just means getting into Bitcoin at a way lower price than everybody else. And that's why, I work with this guy because he knows what he's doing when it comes to numbers, and he is the CFO of this place. I'm just going to share this with you guys really quickly. Here we go. And Mozzie's gone. There it is. So Quantum Expeditions, these guys are legit, and I can only say that because I'm actually working with them. Did I get paid? No, not getting paid. Do I get paid for the stream? No, I also don't get paid for the stream. So I'm telling you all because I actually care. Right now they've raised a million bucks for their farm. They have 169. They were gonna do 170. I was like, nah, you got to make sure that it's 169. 21 petahash right now, and 521 investors. The whole thing is just making sure that we're mining as profitably as possible and not, wasting money where it doesn't need to be wasted essentially. So let me just share this other tab. This is their crowd fund right now that they have going on. In the crowd fund, they have $417,927, but they've raised but prior as well. So that's where the $1 million raise is really coming from. They're looking to do really cool things like actually rewarding people. Oh, look at that. James Felton. Thanks, James, for bailing on a stream today. Not calling him out. I love the guy. But here we go. Fun stuff. We got Wolf Financial. We got Moby Media, James Felton, your friend Andy, um, the Burb. Adrian's such a good dude. I got a chance to hang out with him in Dubai. Wendy. There's lots of things happening, and they have stretch goals. Like again, trying to reward people for joining this expedition. Let me go down, go down, go down. So, and they list everything. Like they're actually upfront with it. Like, what's the risk? What's the reward? They got merch coming out. Should be getting my hands on some of this stuff soon. Until then, I'm rocking my mask hat because mask is actually pretty awesome. Um, but yeah, these guys are. Oh, here we go. This is the one I wanted to show Scott. Scott, what do you think of this robe, man? I'm actually petitioning to get one of these because if I get one, I'll do streams in a robe just for you, buddy. Just for you. I know it's not as fancy or as expensive as your robes, but I'm actually excited for this one. Briefcases, all sorts of things that's going on here, but ultimately, they mine Bitcoin. They know how to mine Bitcoin. They know how to buy high and sell low whenever it's necessary when it comes to miners, and they're profitable and they don't have any debt, unlike a bunch of other companies out there. I mean, that's what it boils down to. Um, Perhaps you do need another robe. You need all the robes. All the robes in the world, I think, belong to you. Yeah, that's what these guys are all about. That's what Quantum is up to. They're actually just builders, man. Like that's the coolest thing about it. It's not like Matzi said. It's not a short term, thing. It's a long term plan. I don't expect to pull get any money or anything out of this in the short term. They're looking at doing dividends eventually. That's their goal. They can't promise it because they're actually SEC compliant. They filed with the SEC. They got through all the red tape that they had to do things their nice way. And yes, Ryan, it is a beautiful, beautiful robe. But yeah, what else do I need to go over? I need to go over that y'all need to watch the Dirty Degens on Cryptos R Us Plus because Dabs is the homie of all homies and puts on a great show with the other guy. Well, I forget his name. He's not as important as Scott. Um, um, but I actually I can't say that because they made me an admin over there, so I got to be nice. Um, yeah, I mean that's what we got going on. Things are not looking so hot as far as the the economy is concerned. Memes are still going to be out there. Meme coins are still going to be out there. They're really really profitable. You got to make sure that you actually pay attention to things. Having a good source of information like those guys over there at Dirty Degens is like top level alpha. Basically, is what it boils down to. It's not a matter of knowing if something is doing well. It's a matter of knowing when to get in, and they're doing an amazing job at covering a lot of different meme coins, a lot of things that are happening in the market. So it's just a matter of being in tune and being in touch with what's happening out there. And the best way I know how to do that is have friends in the right places. And yeah, Scott, you're one of those people. I am currently in the process of holding their domain names .eth and .so hostage. So I need a good call to be able to unhostage those domain names so they can have them back. But I'm just kidding. I'm gonna give it to them for free. I just picked it up so they wouldn't lose it. But yeah, it's a blast having good friends in the space and working with amazing people. This stream is getting little to no views. Two reasons. I didn't announce I was actually gonna do it. Monty just hit me up. I was supposed to be streaming with James Pelton, and all of a sudden, like, can we just do it? Because James is busy. Like, yeah, sure, let's go hang out. And what else? Let me think. And yeah, I don't actually talk about this kind of topic very often, but I think it's really important and some people just kind of miss it. And if I can get you a little bit more information with what's going on and give you a little bit of insight as far as don't be putting all your money into whatever coin right now because the market is uncertain. Focus on things that you know are going to pump. Yeah, sure, they might dump, but that's the play that we're at right now. Or invest in long-term things when it comes to mining because mining is just stupid profitable right now, especially if you're looking at the right areas. BTC, again, has been profitable for a while. It's going to continue to be profitable if you're with the right people. But there's a caveat here. I love my altcoins, and if you guys can get into Larissa and things that are making a lot of money very quickly, get in. But remember, you have to pull out. The pull-out game has to be strong when it comes to meme coins or new projects because otherwise you're just going to leave money on the table and you're going to be the exit liquidity that I know for a fact you don't want to be. That's really the way this game is played. Like the ETC nodes that we're running earlier, I'm still running mine because it doesn't cost any electricity really. But finding out those little nuances of how can I make money now and when should I be cashing out is so important. Like believe me, I love my passive income more than the next guy. Let me see. Can I share my phone? My Helium Mobile is doing phenomenal. I can't complain one bit. Like I actually have not only like hosted sites, I have friends that have um, different things running for me. So I'm basically saying, hey, I'll get you hardware. Give me the location. We'll rev share. That's been super super profitable. So I can't complain about my Helium Mobile at all. Actually, I'm just checking my wallet now because he was supposed to send me tokens. Yeah, he sent me tokens, a lot of tokens, for a month, and it's worth it, like way worth it. Um, so for this location, I made over 250 bucks in less than 15 days. I'll take it. Not gonna complain. I'll take it. It's just one of those things. Like you got to make sure that you are getting in at the right time, but also please don't sit on tokens. Sell when it's the right time because that's how most people actually lose money. Right now, my Phantom wallet is down 6.82%. Um, and funny enough, some of the memes I have in here are actually going up, which is hilarious. And like real projects are going down. Even Soul is down today, but it's just how the game is played, right? That's what I mean. Like you got to make sure you're paying attention to when to get in and also pay attention to when you need to get out because that's even more important because if you don't, you end up being exit liquidity. You end up doing what I do for people, which is just sitting there and letting people take my money. like Scott. He does that a lot. Um, it's a good time. It's a fun place to play in. It's a great playground. But ultimately, if we want to be profitable, you got to make sure that you're actually, let's say, following best practices and actually watching your investments so that you know when to cash out. And that's something that I really, really want to see, is people, doing the right timing. I guess it's not a matter of timing the market, but it's a matter of timing different tokens if you're getting in and getting out. Dabs, I will check your location. I know your address, so I'll just look in the map and see if it's saturated or not, because Helium 5G has a very short, coverage. It doesn't go very far. So I'll cover that. So with Helium 5G, you want to make sure that you are, in a densely populated location, because you're essentially getting paid based on how much data you're pushing through your network. You need a good internet connection, and they do ping your miner to make sure that the internet connection is good. And you don't want anybody else around you, because you want to be the sole provider for that bandwidth. And again, the more people you have using bandwidth in that area, the better off you're going to be, because your profits are just going to go up. And that 250 bucks that I was talking about, that was just from one of my miners. If I can pull up my other Helium wallet, I have others that are making more money, and I have more actually getting deployed as we speak that I shipped out recently. Again, I am not complaining. Just sitting on cash is great. Having that passive income come in over and over and over again. So right now, what is this? Yeah, I mean, this is one that I bought a long time ago. I'm basically earning about 17,000 tokens a week. Is that bad? No, because it's, again, passive income. It's just the more strings of revenue you can set up, the better off you're going to be long term, because it's set it and forget it and just watch the money roll in, especially if you're able to leverage other techs around it. Perfect example is when my Helium IoT miners were doing crap and I couldn't get a return on them. Well, added a new network to it and I started mining Crank with them. It's just a matter of diversifying and understanding that some things are temporary in this crypto world, but you don't have to stay stuck to the same thing that you've been mining over and over again. You can actually change networks. You can change the way that you're implementing things, which brings me something actually really, really fun to talk about. Chirp is another IoT network that I just got a miner for. So working on the video, I'm going to show you guys how that one works, and hopefully I'll be able to give you updates as far as how profitable it is, because again, it's all a matter of the earlier you get into a project, the better off you're going to be, because mining rewards are usually way high at the beginning. And my goal is, again, to pay off the miner short term, like really quick, so that everything else that comes in becomes profit. And that's what I want for all of you, for all to be profitable in the space. But yeah, well, I'm going to leave it here because I've been talking for almost an hour. And now I'm all by myself because Dabs doesn't want to jump on stream with me because he's not wearing his fancy robe. He only wears that for dirty degens and special occasions. So yeah, thanks guys so much. I don't even know how to. Man, this has been so long. Like, am I recording? Am I doing this right? Yeah. Okay, I'm doing this right. Okay, gonna end the stream here. And oh yeah, Fridays, if you guys are interested, doing spaces with Loudmouth and Paisan on Twitter. Really, really good space. Talking to Shibtoshi from Squid Grow, talking karate combat, all sorts of things that are happening in the space, and just good time. And I'm gonna give away free money. And if y'all know Mask, that free web browser with decentralized VPN, 250 bucks from Mask this Friday. So there's that. You guys are awesome. I will catch you on the next stream. Have a great one, everybody.